It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, November 9th, 2015. Back at it again. Hope you guys had a great weekend. Boy, a little bit of nip in the air here in Los Angeles. I'll tell you, I won't even begin to complain about the cold weather here. It has been a very beautiful month of November. Don't forget, we get a holiday coming up on Wednesday. Veterans Day is on Wednesday. We'll talk more about the plan on that tomorrow night on the newsletter. Boy, oh boy, today was what we call Reaction Monday, the Monday that follows Friday's non-farm payroll report. You know, a lot of professional traders, they won't even touch the non-farm payroll report, but they'll come in and trade the Monday afterwards. We opened up this morning. We expected to see some fireworks on the chart, and for the most part, we definitely got some pretty good volatility and some great opportunities across the board. It is very, very clear right now the Fed has opened the window for raising rates in December. Now, if you remember, we've been calling the bluff of the Fed all year this year, but I think, boy, Friday's really bullish non-farm payroll report. You combine that along with the fact that Miss Yellen, my gal, she kind of put herself in a position where she's kind of obligated to try to raise rates this year because it was part of her whole, welcoming in as the new chairperson here at the Fed. You know, she did tell us she was going to raise rates in 2015, so I wouldn't be surprised at all if we see an interest rate hike in December. Obviously, it does not affect a single thing of how we trade here at School of Trade, right? We focus on what the charts are telling us because that's the easiest and really the path of least resistance. So we're going to jump right into today's charts. Forget about whatever they're saying about the reaction of the Fed, reaction of non-farm payrolls. We have a plan for tomorrow based on what we're seeing in the chart right now. Crude oil starting off this evening is bearish with a late session trading range. Our plan for crude tomorrow is to look for selling opportunities at resistance levels above. We've got a great plan for crude traders tomorrow. Beautiful day on crude today. E-mini S&P is bearish. Got a spiking channel down on the S&P 500. That means we're definitely expecting some profit taking up off these lows. The S&P is going to be a fun market this week. This market may be taking lunch money from all the counter trend buyers trying to buy these dips right now. Get a plan for the E-mini. How about the gold? The yellow metal is range bound and sideways this evening. Not much to work with on gold besides a pretty easy trading range. So we're going to be fading breakouts on gold tomorrow. And a lot of the same stuff on the euro. Euro is sideways, but the euro also has a price wedge to work with. Now, how well did that wedge work on the S&P on Friday, right? Wasn't that a beautiful setup on the S&P Friday morning? Breaks down, pulls back into the wedge, and then took off. I mean, it was just tasty selling opportunity using that wedge in the S&P. So we have a euro wedge setting up for tomorrow. As you guys can see, we got a plan here for crude, S&P 500, gold, and of course, we can't forget about the euro. Before we jump into our charts, though, for tonight's newsletter, I do want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful, but there's a lot of great stuff on our trading blog, and you can find a link to this webpage in the description of the YouTube video. First of all, upper left-hand corner, you can grab a free pass to come out in a $10 live trade room as a guest. If you're not a member here at School of Trade, grab a free pass, come out and test drive our trade room, upper left-hand corner. In the lower left-hand corner, you can register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email so I make sure we have the right email address. Right below the video tonight, you'll see a spot to download all the charts in tonight's video. So you can download all the charts in tonight's video right below the video itself. Follow that link below. And then over on the right-hand side, you can learn more about joining our trial membership. It is not the same as the free pass. You can also read member reviews. You can learn more about our different levels of membership. And guys, don't forget, we always have someone standing by 24/7, 365 to give you guys a hand. Now that you know the who, what, where, when, and why, we get a plan for crude, S&P, gold, and euro. Let's get on it. Let's get on it. Reaction Monday, the Monday after non-farm payroll Friday. Here we go. Tomorrow, of course, will be Tuesday, and we'll continue to get that reactionary price action to last Friday's very, very strong non-farm payroll report. Starting out here with crude oil, and we began the day today with this, I kind of labeled as the, what the heck is this, right? This drop down on Sunday, and of course, just whoop, right back up, and then see ya, right back down. When we came in this morning, the trade room, we found this market tumbling right off those highs this morning. Very, very easy to see that trend going lower. So here we have a bearish channel down. Almost got our measured move on the way down before running sideways here into a bearish bias trading range. Right, so two real important pieces of this. We'll call it three. I think the first important piece is this little, what is it, 43.83, this kind of what in the who, what happened here. You can see, though, right, it's definitely acting as a magnet right now. Every time price goes lower, these buyers just keep buying that dip below. I'm not gonna comment on what they're trying to do down there right now, because this market is definitely bearish. We also see the second piece of this puzzle is going to be that channel down, but really I think the most important thing is going to be that measured move. That's going to put some support here at 43.41. That'll make for a target later on this week. And then what I think to be the most important information here is this short-term trading range. This is a bearish bias to it. We're seeing range rotation, and of course bearish bias, trading range. Take this trading range expansion levels, 44, 45, 44, 83. Those are going to be very, very important levels of resistance overhead. We have crude oil bearish with a late session trading range, which means our plan for tomorrow, really quite simple, will be to look for selling opportunities at resistance areas above using buyer failures, reversal patterns, or wave patterns after we make the move. The most important levels overhead, all of these resistance areas overhead will be important, but you can definitely see some real tasty areas of resistance here that we love to be able to sink our teeth into. Don't forget, always wait for proof as that price goes up. Your first opportunity will be buyer failure. Your second opportunity will be a reversal pattern. Your third opportunity will be to wait for the price to make its move lower and then sell those rips right on down. Don't forget, we are in correction phase right now on this bearish trend, so stay patient, let that price get up, and then we're going to be calling the bluff of these buyers tomorrow. We are going to be looking for selling opportunities on crude using buyer failures, reversal patterns, right? And of course, wave patterns to the short side as it makes that tumble back down. Right now, the trading range that we're in right now, we want to fade these highs. Again, very, very simple, bearish trading range. When it goes up, buyer failure to sell it back down. Goes up, reversal pattern, sell it back down. If we don't want to look for the reversal to buyer failure, wait for it to start making its move lower and just sell those rips right on down. And of course, that trading range will be the magnet as we come back down. So price goes up, buyer failure, sell it back down. Stay patient, wait for proof. Don't blindly sell this market until you see either buyer failure, reversal patterns, or wave patterns after we start making new lower lows. Sticking to the downside there on crude right now, I would love to be a fly on the wall in those OPEC nations right now. Don't forget, we get a scheduled ordinary meeting for early December. That's the next time we're going to hear from OPEC. Look at a plan for crude. How about the S&P? S&P 500, another bearish market here today. This is going to be interesting here on the S&P. Again, like I said before, I think the gig is up about rates. Personally, I've been someone who didn't believe there was a chance in hell that they were going to raise rates this year. But honestly, I think December is going to be an area of time where we have a lot of kind of bullishness coming out of that lackluster third quarter, You know, we saw remarkably strong jobs, remarkably strong employment number. The only thing that really didn't tick higher was the participation rate, but we all know why. It's because all they're hiring for right now is busboys, and nobody really wants to take that job. So it's very, very clear that, yeah, there are some people that are sitting on the sidelines right now, probably still living off their HELOC money from 2006. But the reality is, though, is this market, the overall U.S. economy is on track. It is growing, it is expanding, and we're seeing proof of that in all the news reports right now. I think if they're going to raise rates, December is going to be an easy way. Everyone's distracted with the holiday season. They're expecting to get a nice stiff wind out of the retail section at the end of this year. So this would be a great opportunity for them to raise rates. Again, I don't care what they do, to be honest with you. It doesn't matter to me. Raise rates, drop them. You could pull a Draghi and go further into negative right now. It doesn't matter. I'm going to trade the chart. I think this is just, everyone seems to be talking about this right now. So if I had to guess, I would guess raising rates in December. It doesn't change a gosh darn thing I'm going to be doing here in this newsletter or in my trade room tomorrow. But if you're wondering what my opinion is, I wouldn't be surprised. Okay. What are we going to do with this chart, though, right now? What are we seeing? Because all I need is on this chart, right? I don't need to really care about interest rates, although everyone wants to talk about those right now. E-mini S&P is bearish with a spike in channel down in today's session. So we expect to see profit-taking correction up off the lows, followed by buyer failure, right, to buy the pullbacks for the best selling opportunities tomorrow. Remember, this correction could be quite large, so stay patient. Stay tuned for those buyer failures. I mean, this may go all the way up to that, right, to that 2088. Really, there are, three real important pieces to this chart right now. The first one is definitely the spiking channel down. That just screams strength, right, out of these sellers right now, right? Definitely a strong spiking channel down. And that spiking channel ultimately tells us we can correct all the way back up to that 288, right, 2088 area before coming back down here. So that spiking channel screams bearish strength. It also tells us that, the sellers are probably fully engaged here right now. So we're going to expect a measured correction up off these lows. We're going to expect a profit-taking correction up off this low. The second important thing that I see right now, you got to go back to a day ago, last Friday, and you'll notice that we undershot the prior high of day, right? That was Friday's high just before the drop back down, right? That just shy of that 2100. I don't know how far we're going to go in this correction, but this is the S&P we're talking about. They're talking about raising rates right now. It's getting everybody spooked out, right? So, that's definitely an area of interest that may be attempted to be tested before we make that run back down. I just keep seeing these bears, right? I have this vision of these bears going, "Mwahahaha, I'm going to wait for it to go all the way up, and just when they think it's bullish again, I'm going to sell it back." Right? I kind of have that mischievousness right now because, again, there's going to be some shenanigans out of the S&P 500, right? This is a market that is dominated by very smart, very well capitalized, and very, very sinister traders, right? Trust me, they're not going to make it that easy. So again, big strong move down, almost too easy, almost too obvious, right? Fed's going to raise rates. Of course, price is going to drop a little bit, right? So, I would expect a little bit deeper correction, but hey, I'm going to trade what the market tells me right now. And right now, this market tells me bearish spike and channel down. We know that we can have a deep correction, again, easily back up to that 2088. And then remember, on a spike and channel, what you want to be thinking about spike and channel is spike and channels can be a little tricky. They confuse us a little bit, right? They kind of rope us in the wrong direction and they head back lower. That bearish spike and channel says strength, 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 strength. Strength so much to the point that those sellers who are already short, they're going to have to take some profit. And what's going to happen is, typically speaking, those profit-taking corrections can go all the way back to the point where that channel began. So this is what happens. we see this measured correction back higher. Now the buyers think we're bullish now. They don't see that spike in channel. They don't realize that this push higher is really fueled by profit taking. And then what happens is they try to buy that next pullback. Smart sellers are waiting to see them get stopped out. And then once they get stopped out, this becomes a big old ABCD pattern on the way down. It's a very lucrative opportunity here. This is one of my favorite setups, is the spike in channel. So AB equals CD. So, I don't want to say you can't buy during the correction, but just be aware you're going to be buying counter to the trend. So treat it as a scalp until proven otherwise. Eliminate risk at all costs if you're going to be buying on the way up here. But I'll be staying patient here, waiting for these resistance areas overhead. And again, this could go as high. I believe it was 2088, right? Just below that 2090 area. That was kind of the baseline of that spike in channel. Yeah, 2088. So don't be surprised at all if we get a nice strong push higher, up into that area, 2090, and then again, buyers sort of buy that pullback, and they may be successful. For all I know, they'll be successful, but the odds are not in their favor of being successful, and we'll look for that price to come crashing back down. If we do run higher, I would imagine we're going after that 2100 big round number, which again is just, it's Friday's high that they really tried to get to today, but you can definitely see they were unsuccessful. I'm definitely looking for the sell side right now, and I'm going to use buyer failures after a correction to do so. Just please be careful, right? Please be careful on this. Remember to always look for proof, and if you don't know what proof is, don't push any buttons and don't risk any real money until you know exactly what you're doing tomorrow. Let's keep going here. How about the gold here? Now, the award for the most pathetic market, this is it right here. Thanks, gold. Really, thanks. Yeah, I even went to a faster time frame for you tonight to try to get something out of this pathetic excuse of a market right now. No wonder it's pathetic. You know why this market's going to be all sloppy right now? It's already priced in the move. What are these guys going to do? They're going to raise rates in 2016, right? Sounds like it's bad for gold price. Hello? Newsflash. Bad for gold price? As in worse than it's already been? Have you been under a rock the past? Look at this thing. I need to go. How far will it go? How far will it go? Oh, yeah. What do you think? I would say this has already been priced in, folks. I would say they already checked the weather report on that. They already packed a blanket. It's going to be cold in gold land, right? Yeah. So, in my opinion, this market's already priced in here for that raising rates, right? It's already priced in. So, really right now, you're not going to see it. I'd be very surprised if we see another strong push lower here, because that would tell us that the sellers aren't already in. Smart sellers are already in this market. What a great example on gold. If you're waiting for that moron at CNBC, actually they're not morons, they're very smart people, they really are. But if you're waiting for that very intelligent person to come on television and tell you what's coming next, newsflash, it's already happened 3 days ago. You can't rely on news, you can't rely on the television set. Well, I hope you do, because it's going to make professionals like myself, make my job a lot easier if you do, right? So this has already been priced in. So as of right now, this is like beating on the chest, resuscitation time here on gold. You got to fade this news. You got to fade these breakouts right now, and that's my plan for tomorrow. Honestly, I'm not expecting much out of gold until sometime into the new year. If we do, wonderful, but I won't be surprised if we don't. Let's put it that way. Just because if they're talking about raising rates now, think about it. They raise rates. What is that going to do? Right? It's bad for the dollar. It's good for gold, right? So what? Gold should go down, right? Prices should drop. If the dollar rises higher, drop what? Drop lower? It's already gone, right? We've already collapsed here. So it's going to be, I don't see a lot of downside potential here right now until we get back up a little bit, right? So I want to see this price get up off these lows on gold. And then again, what's going to keep them propped up? They're going to need something that's going to keep this price propped up, and I don't see it at this time. So right now, whatever goes up, you just, as long as you see buyers failing on it, Once you see proof, you got to sell it right now on gold. That's the bottom line. So gold is range bound and sideways this evening. Again, just pathetic, right? I'm attempted here to kind of shake this chart up a little bit here to see if we can wake it up a little bit. We know why. Our plan now is to fade all the breakouts using failure patterns tomorrow. We have some interesting levels above us. Okay, we have the previous low of day below. So kind of look left here for a second, and these are going to be some easy areas of interest here, right? Let's go higher here first. First of all, where am I looking? And again, what I'm doing is I'm identifying areas overhead that will make for great fadeable opportunities. Let's go back to the high here. There's your news candle, right? That big old boy right there. That news candle, right? 1108.6. That's where the non-farm payroll news started. That's one area of interest. Another area of interest is going to be this little news gap right there. That little guy right there, right? It just so happens to line up with the range expansion. It's right about 1100, right? Nice big round number. Okay, so price goes up. Buyers try to buy the pullback. They fail. That's what I'm talking about, right? Buyer failure. Price goes up. Buyers try to buy the pullback, they fail, right? So on and so forth. Obviously, I'm not going into tremendous detail about the techniques that I use to get into these trades. I'm going to make you come out and join me for my class sessions as a member here at School of Trade, but that's exactly what you're looking for here right now. Also, levels overhead right now. Once again, we know here, there's my trading range. Take that trading range, range expansion. Range expansion, right? These are easy areas. Price goes up, buyer failure, sell it back down. Price goes up, buyer failure, sell it back down. Remember, as this price goes higher, there are three ways to sell it, right? The first opportunity would be buyer failure. Second opportunity would be reversal pattern. What's my third opportunity? After it breaks down, sell those rips, right? Wave pattern short. You can be the first one in, the last one in. It's not going to matter as long as you wait for that price to get up off this lows. Again, I just don't see much downside potential here right now, right, on this gold market. The final thing, though, is we know that we have Friday's low a day. That hasn't been tested yet, right? It's tough for me to say the word buy right now on gold, but that would be a fadeable area there. Right, so definitely have a bearish bias right now. I'm waiting for price to go up, fail in the pullback, right? Fail with the reversal pattern, fail with the buyer pattern, right? Or sell those rips back to where we came from. Don't forget tomorrow, though, we will be watching for that 2-try rule. Guys, don't forget, we do have a point at which if this market breaks up or down and just keeps on going, we will eventually, courtesy of our 2-try rule, you can probably imagine what that means, right? We'll watch that 2-try rule to see if we're going to get any confirmation of a new trend tomorrow on gold. But again, you know my plan on gold. You know my reasoning. How about the euro? Wrapping up here on the euro. The euro is sideways with a clear trading range. And thank goodness, a little bit more we can work with on this one. We get a price wedge as well, right? We're experts on price wedges now, right? If you watched last Thursday night's newsletter, we talked about price wedges. Here's an example of a wedge with plenty of room left over to fade. So we're not quite there yet. Okay, so we know we have the trading range. We know we have the price wedge. So our plan right now is to sell the highs and buy the lows using failure patterns until we see that 2-try rule confirm a breakout in one direction. Our biggest clues right now, I believe, are the wedge, which will get narrower with each candlestick, the previous low of day, which is right below us, and the non-farm payroll news candle all the way up above us. Now, first of all, let's talk about that wedge. We talked about this last week ahead of the non-farm pay report because it really made us a lot of money on the S&P. So a price wedge is basically just a trading range. What you want to be aware of is that early on in the wedge, we can fade the breakouts. But as it goes later in the wedge, think of it as a jack-in-the-box, right? Bam, right? And it will eventually break out. right? It'll break the heck out, right? Okay, so we know that we're going to get that breakout. Now, here's the problem. That breakout's going to be difficult to get because you're not going to know which one to trust. Okay, so your job is not to buy that breakout. Okay, we very rarely are going to have success buying breakouts. What you want to do is you want to use the pullback on it, right? So let's say it breaks to the upside. Wait for it, wait for it, wait for it, wait for it. Okay, strong green candle. There's my proof. Now let's go in the direction of the breakout, right? A lot of times what happens is that it just breaks out and comes all the way back down. And the trouble is that if you try to catch that runaway market like that, it's like trying to catch a bullet with some chopsticks, right? It's very, very difficult. It'll blow right through your orders, a very illiquid, very, very, very volatile move. And oftentimes what happens is you end up getting filled up here just to see it pull back on you, right? Ain't nothing worse than trying to trade that breakout, getting a bad fill, just to see it pull back, put you through a whole lot of pain. And then you know what happens, right? You say, okay, uncle, I'm out. And then you know where it goes, right? See ya, suckers. Okay, I appreciate that. I'm gone. Don't make that mistake. Don't try to buy the breakout. Wait for the breakout. It's so much easier that way. It's easier on our nerves. It's easier on our trade account. It's easier on the market. It's easier on everything, right? That's what I recommend, right, for that wedge. So right now on the wedge, you can see we still got some room, right? We haven't quite got there yet. So we're definitely in fade mode here still, right? Right? Bam, to the downside. Don't take that breakout. Wait for it to come back, right? And then we'll look at the direction we're going to go in from there. That's going to take some analysis in real time, and we'll do that together tomorrow with our students in the trade room. So very similar here on euro that we saw for gold. The only difference in the euro is we get a lot more to work with on this euro, right? Fade the breakouts until we have the two-strike rule, the two-try rule come into play. Some easy areas overhead. We have an ABCD measured move. Sorry, wrong button. There we go, right? Measured move. And keep an eye on this non-farm payroll number. This one goes back to the Friday's non-farm payroll number. That takes us all the way up, right, to where that non-farm payroll news came out. So that'd be an easy way. Stay patient. Bring that price right back down in. Again, as we go higher, we've got resistance levels overhead. We're not selling these resistance areas. We're waiting for price to go up. Buyers try to buy the pullback because they don't know it's a range. And if they fail, there's no guarantee they fail. If they fail, we can sell it back down, right? Price goes lower. Again, measured move down. Sellers try to sell that retracement. If they fail, right, we buy that break back in. Same thing, previous low of day, right? That's last Friday's low, very similar to what gold's looking at as well. All right, guys? Balance here on gold and euro. Fade those breakouts until the two-try rule tells you to stop, right? On the euro, remember, keep an eye on that wedge on euro. Gold, boy, you look frigid on there, you gold. And then, of course, on the S&P, I'm expecting to see a little bit of a deeper correction here on the S&P. Maybe I'm wrong, maybe I'm right, but I'll be waiting for that price to get up there and then look to sell that sucker back down. Wait for proof on the S&P. That market will take your money if you don't wait for proof. And then crude, like we talked about earlier, bearish bias to this range. Whatever goes up must come down. That's what we're doing here right now on crude oil. Heads up, we don't have crude inventories until Thursday this week, so keep that in mind as well. Guys, that's my plan here. Crude, gold, euro, right, and the E-mini S&P. Don't forget, download today's charts. Register for the newsletter mailing list. And if you got some free time here, guys, don't forget, head over to schooloftrade.com. Get registered for our free trial. I take a lot of pride in the fact you're going to learn more with me on my free trial than anywhere else on the interwebs. And while you're here, don't forget to get more information about our 3 levels of membership. And you know, we always have someone standing by 24/7, 365 to give you guys a hand if you need any help along the way. Guys and gals, we've been doing this longer than anybody else on the planet, guys. We help new traders every day do this the right way. Remember, being a successful trader is like being successful in anything else in this world. It's not enough to have the numbers. You've got to have the sequence of the numbers to open up this combination lock, right? They call the financial markets. My name is Joseph. Thanks for being here today. Thanks for being great friends of the newsletter. Don't forget, send me some feedback to JJ at School of Trade. Give me a thumbs up on the YouTube video. Share this information with a friend, and we'll see you guys tomorrow morning, 8 a.m. Eastern time in my trade room, 8 p.m. Eastern time tomorrow night for the newsletter. You guys be well out there. Be nice to each other. I'm out of here for now. Adios, amigos. Bye-bye for now.